Thank you for joining us. Good morning and welcome to the program. I'm Chimeze Obi Iwagu.
And I'm Ladi Williams. We begin with updates on the global market. Prices eased for a second day this morning as mounting coronavirus cases globally raised demand concerns. Although a drawdown in U.S. crude stocks for a fifth straight week and robust data from China capped losses. Brent crude oil futures fell 18 cents to $55.88 a barrel, while U.S. West Texas Intermediate slipped by 11 cents to $52.80 a barrel. U.S. crude oil stockpiles last week fell more than expected, while gasoline and distillate inventories rose as refineries ramped up output to its highest level since August. The Energy Information Administration said that on Wednesday, oil producers face an unprecedented challenge to balance supply and demand as factors including the pace and response to COVID-19 vaccines cloud the outlook. A hefty COVID-19 relief package, which U.S. President-elect Joe Biden is due to unveil on Thursday, also kept losses in check.
And economies of the world have continued to talk about tackling the challenges of poverty, inequality, and infrastructure deficit. And one way to do this, according to some analysts, is by providing adequate shelter for your people. Because if I have a home, I will be better positioned to look for a livelihood. In this special report, our correspondent Daredo looks at how Nigeria's commercial capital Lagos is dealing with the issues of shanties and how the government's action affects the survival of some residents. Let's watch this.
Whether wrapped up in the upscale part of town or floating beneath the city's longest bridge, slums remind government of how much work is left to be done, especially as it concerns growing a more sustainable and inclusive society. In Lagos, 2 out of 3 people live in slums, and that's according to the World Bank. These informal settlements are visible and constant evidence of extreme poverty, and now those who find themselves at the bottom of the pyramid paddle their way through the economic reality.
Removal order. You are to remove within 7 days.
Mawa waterside shanties in Lekki were demolished in 2019. The reason given at the time, the state government is preparing for the construction of a coastal road which will serve as an alternative route for the Lekki-Ekpe Expressway. Fast forward to 2021, no construction work is in progress and life is gradually creeping in at the site. John works here as a barber. His open field barbing shop is obviously not his first option. His third is gone. He's only left with the essentials: a canopy, a mirror, and his clipper.
To start up business in Nigeria is one of the hardest things. Mostly why you are in Lagos, mostly if you are in Lagos, so it's very hard to survive.
The story of Monkey Village in Okpebi area of Lagos is similar to Mawa Waterside. The economic inequality is clear. There are complaints that those who illegally occupy the shanties are posing major threats to other residential premises. The many stories of Lagos shanties and their demolitions don't always have the handwriting of the state government. In the case of Monkey Village, it took rounds of legal battle from the concerned parties and an eventual court order from the Supreme Court before the structures were pulled down.
You want to protect your property from an impostor, from somebody who may creep in gradually and be doing the kind of things you see here.
Hundreds of people, young and old, are displaced. Some have found a way out of the leveled neighborhood, but amid the ruins and rubbles, there are those staying back, yet to figure out their next move. Osage is one of them.
Where the boys used to play football. That's where we now take refuge.
His makeshift house is no longer standing. The roof is barely over his head.
On the 31st of December 2020, we were just in our house. Me, I was about going out that morning. I started hearing voices saying, tax for so, bulldozer don't come, bulldozer don't come. I said, what happened? All of a sudden, we started seeing bulldozers destroying people's houses. People that were not at home, bulldozer finished some of their properties.
The Lagos state government has always clamped down on shanties, most times citing criminality and environmental infringement, a move non-governmental organizations say is insensitive and anti-people. Dari Idu, Channels Television News.
Yeah, Jimmy, really gripping footages there. You know, I'm wondering how are these people going to manage now that their homes are gone.
You see, that's where I think the government needs to take a look at and perhaps put some kind of human face to doing certain things, because these people have their livelihood. These people, I mean, if you listened to the report, it talked about 2/3 of Lagosians living in shanties, living in slums like that. You know what that means. So when you denying them of their home. By the way, housing, when you talk about economic development, housing is very, very key. So
how much affordable housing do we even have in Lagos State?
Well, that's where the government comes in. So the issue is, what have the government done to actually settle these people, to ensure that they don't pose that same security issue that they are talking about? Because it now makes it glaring, the gap between the rich and the poor. So even you and I, the average Nigerians, were not even safe from these people. So I think it's an area the government will really have to...
Welfare, social welfare.
Absolutely. Yeah. All right, still on Lagos State, the approved 2021 budget of Lagos State is 1.64 trillion naira. Why is this significant to Nigeria? Bismarck Rewani, CEO of Financial Derivatives Company, joins us next. Well, we're being joined by Mr. Bismarck Rewani, the Chief Executive Officer of Financial Derivatives Company. Thank you very much for joining us, Mr. Rewani. Well, I have seen you for the year, but I can still say Happy New Year to you.
I've not seen him, so Happy New Year.
Happy New Year.
Happy New Year. All right, yeah, we're talking about, Lagos State budget. Of course, Lagos is Nigeria's commercial center, and in fact considered as a mini national economy. And the government has announced about 26.52% increase in its budget. Why is this significant to Nigeria and, of course, Lagosians?
Well, Lagos is an investment, travel, financial, and trading hub for West Africa, not just for Nigeria. Whilst the state of Lagos budget is about 9% of the total Nigerian budgets put together, Lagos controls directly and indirectly 20% of GDP and 40% of the informal economy. So Lagos cannot be ignored, not for Nigeria, not for West Africa, not for even the Central African hub. So, and the budget in 2021 is critical in the sense that this is a time when we had a sharp decline in growth, negative growth, -6 down to -3. So the budget as a tool for reflating the economies and using investment multiplier to actually sustain growth is important. So if you look at it, Lagos, 1.1 trillion naira. Lagos has 60-40, that is capital expenditure of 40 and recurrent expenditure of 60. Lagos has invested significantly in what we call urban renewal and regeneration. Lagos has more than its fair share of problems. ENS has told us that. So it's time to actually get everybody back to work and get things done. Don't forget that Lagos, I think the results came out yesterday, and Lagos was number 6 in the WAEC results out of 35 states. So that's an interesting development.
Okay, so comparing the Lagos State budget to that of the federal government, Lagos State budget increased by 26%, while the federal government's budget increased by 25.72%.
Yeah.
How is this, why is Lagos State's budget bigger than the federal government's budget, considering the revenue problems all state governments are having at all levels of government, actually?
As a matter of fact, I think the Lagos State budget should have grown even much more than that if we're to follow. But there are some constraints. But luckily, Lagos also has the highest debt level, right? But they borrowed at a good time, way back. But so because interest rates have dropped sharply, Lagos stands to benefit. As a matter of fact, they've renegotiated refinancing of most of their debt instruments. So Lagos will benefit from that. And if you look at the internally generated revenues, Lagos is by far 75% higher than the rest of the other states. Now the question is that, what has Lagos done with this money, and what do they intend to do? So we got to look at those priority expenditure items. Number one, transportation and infrastructure, opening up the constraints. You must agree, even coming here, the bottlenecks. In Nigeria, bottlenecks. Badagry Road, bottlenecks. Everywhere, bottlenecks. So they need to debottleneck the transport infrastructure. One. Two, education, right? Then healthcare. Lagos has dealt with 3 major healthcare challenges over the last decade. 1, HIV, 2, Ebola, and 3, COVID. Now, Lagos is the epicenter and within Nigeria, I think there are 17 local governments that have 65% of the COVID cases. 3 of them, Alimosho, Etiosa, and one other one, are key. About almost 80% of all the cases are centered there. Why? I don't know, but one can explain that. So, preventive healthcare, primary healthcare, and there's been a significant expenditure. I think the healthcare, Lagos is probably higher in healthcare than in the education. There are serious bottlenecks in the education sector, but that's what we see happening.
Now, you talked about education now. Of course, we have serious emphasis on education and increasing productivity and building human capital. Now, what can you say Lagos has done to boost its competitiveness, as a center of excellence when it comes to education?
Well, this is a day of e-learning. So first and foremost, I think that MTN confirms that about 40% of subscribers, I think, are in the Lagos metropolis or metroplex. Broadband penetration in Lagos is far higher than other parts. So the question of e-learning is there. Then teacher training, education. If you look at the budget itself, there's emphasis on teacher training because that's where you have to train the trainers. But if not, you're actually entrenching mediocrity and ignorance. So what they're trying to do is to do that and focus on it. Is it enough? No way. Nowhere near. Because we're spending 10,000 naira per head a year on education. That's, you can't even buy a pair of shoes with that, right? Not to talk of education. What people spend on voice, is far in excess of that averagely. So if you take what you call the average revenue per user in communication and look at how much is spent on education, but the education data may be wrong in the sense that there are 18 million people in Lagos, but only 60% of them are below 15. So if you actually you multiply that by 2, you find that they're spending about 21,000 naira per head on schools. But there are 18,000 private schools in Lagos. And the bulk of people go to the private schools, not the public schools. So there's one, how do we make those public schools attractive? How do we get them, how can there be value for money in those schools so that parents can feel? And now the biggest challenge is, virtual learning. So if the guys have no electricity...
That is where the world is going now.
Yeah, but if there's no electricity and no broadband connection, virtual learning. So if you look at the NBS data, at least 30% of the kids during the lockdown had no contact with their teachers in any form. Even if they had electricity, the teachers didn't have electricity. Where if they had broadband, the teachers didn't have. So how do you carry out practicals in chemistry, physics, biology, virtually? It's not possible.
That's a huge challenge. And that brings us to the latest WAEC results. Lagos State was 6th amongst the 35. You did mention that. And Lagos is spending about 10,000
naira.
Yeah, per capita.
Yeah, per head.
On education. Now, does the outcome, justify this expenditure?
Honest answer, Lagos State is trying, but there's so much more to be done. The outcome does not justify it. If you just travel across to Accra and see the performance of education in Accra. Look at healthcare, look at that in Ghana. If Lagos was a country, right, Lagos would be number 2 after Nigeria and West Africa. Lagos would be like number 5 or number 6 in Africa. So Lagos GDP is almost 3 times that of Ghana. But education spend per head in Ghana is far in excess of what you have in Lagos. Life expectancy in Ghana is 64 years, while life expectancy in Lagos is 52. So that tells you the story. So there's a lot to be done, but that's Lagos has the highest domestic debt stock. Lagos has the least poverty head count, 4.5% in Nigeria, and it was the greatest beneficiary of capital inflows into the country. So having said that, I think when you see where all the countries and all the states are in Nigeria today, Lagos is far ahead of others in terms of optimization of resources, rationalization of debt, but the infrastructure is still begging for additional commitments.
And many states are beginning to renege on the payment of the minimum wage. But how has Lagos State government been able to keep paying, considering the constraints?
The truth is that Lagos fiscal responsibility in Lagos is higher than was, because first and foremost, the Lagos electorate and the Lagos population are extremely demanding. So you can't afford to fool around. What you can do in some states, some smaller states or innocuous states, you can get away with that, but you can't get away with it. In Lagos, within 24 hours of not doing the right thing, everybody be out in the streets. So you know that. So whoever is in government house in Lagos, and luckily Governor Sanwo-Olu is there, before then Governor Ambode and others, Raji Fashola, they are kept on their toes by a very demanding public and very sophisticated.
Well, Mr. Rwani, I beg to still keep you here with us. Okay, Mr. Rwani is still here with us, and with the kickoff of the African Continental Free Trade Agreement, more conversations have continued to emanate from it, and that's our focus on commodities market update next.
And for the commodities market update, we're looking at the AFCFTA, and we still have Mr. Rwani here to break it down for us. Nigeria is one of the last countries to ratify the AFCFTA and has continued with some restrictive policies, which is actually inconsistent with the spirit and letter of the agreement. Do you think Nigeria is ready for this agreement?
Nigeria is not prepared, but Nigeria has no choice. This train has left the station, and we are in it. So, first and foremost, restrictive practices and prohibitive. The Minister of Agriculture was talking yesterday about rice and maize. Rice and maize being extremely important, and therefore there are national assets that need to be protected and all that. But we've gone past that. The world has moved into trading blocks. And you have the North American Free Trade Agreement area, you have the European Union, you have the Asia Pacific Agreement area. And so this agreement area creates the largest trading bloc in the world in terms of people. It has 55 countries, or 54 countries in Sub-Saharan Africa. We have GDP of about $2 trillion. It is estimated that by 2050, GDP of African region would have multiplied by 1,000% to over $29 trillion.
Wow.
Well, what is going to happen? The immediate impact is, as of 1st of March and 1st of July, you would have open borders, right? You will have free movement of goods, people, and investment flows. But you are not going to feel the impact immediately. But it does mean that every Nigerian consumer, every Nigerian producer and investor, manufacturer, has to be having an African perspective, no longer a Robinson Crusoe Nigerian economy. The philosophy, the mundane philosophy of economic patriotism and import substitution and protection and all of that is past gone. We are going into a competitive world. And so we go back to the Ricardo theory of wealth of nations. Countries have comparative advantage, companies have competitive advantage.
Right.
And that's what it's all about. So we have to take African nations, the 5 the biggest ones, Nigeria, South Africa, Kenya, Ethiopia, and Ghana, right? So you look at those, and Nigeria controls 22% of total GDP of Africa, followed by South Africa, 14%. But by 2021, 2022, Nigeria's share of the total would have dropped to about 20%, South Africa about 14%. But that's not the most important thing. The most important thing is that where is the trading going? Who are our trading partners? China is our most important trading partner in Africa, and also the heaviest investor in this continent. South Africa has 31% of the exports of Africa. Yeah. So Nigeria is number 2, 28%, but Nigeria exports mainly oil, LNG. So if you back out oil and LNG, Nigeria becomes a small player. So after that, you have Angola and Cote d'Ivoire. But when you see imports as well, South Africa imports 40% and exports 31%. That means South Africa imports products, processes them, and exports them, while Nigeria imports products, processes them, and consumes them. And that puts us at a disadvantage. But it's a new dawn as far as Nigeria and Africa is concerned under the African Continental Free Trade Agreement.
All right, you did mention the Ricardo's law of comparative advantage on, international trade, and Michael Porter's forces of comparative advantage. So, what sectors and which companies are going to make, the maximum impact, based on these theories that you did mention?
Yes, first and foremost, building materials, petroleum products, manufacturing, banking, aviation, and trade. These are the sectors in Nigeria that will benefit or will be affected by this agreement as soon as we kick in. It's not by coincidence that Nigeria opened its land borders. It's not by coincidence that Nigeria has reduced the import duty on commercial vehicles and cars completely. And if you look at the companies that are going to benefit most, of course, the slide there shows clearly you have Dangote is number 1, is the biggest conglomerate in Nigeria. But you have Lafarge, you have Nestle, you have Guinness, you have BUA, you have Standard Chartered, UBA, the Pan-African Bank, ETI. There are 5 banks that have very solid African footprints. They are UBA, Stanbic, IBTC, Access Bank, ETI, which is EcoBank, and I think FBN Holdings. So it's quite clear that those are the companies and then the sectors, but Dangote, more than any other company, because it's a conglomerate, it's diversified. It has refining capacity, petrochemicals, fertilizers, cement, right? And has seasoning, salt, sugar, and packaging materials, polypack. So there, I think they saw it coming, maybe 5, 7, 10 years ago, and they positioned themselves to benefit from this, not only as a Nigerian strong and dominant company, but as an African competitive conglomerate.
Okay, take us through the burning economic issues and their implications.
Well, first and foremost, with oil at $57 a barrel, and the fact that once you have that, it means that Nigeria is in a better shape. Our budget was predicated on $40 a barrel, so it's $17 headroom, but our production has actually come down to about 1.5. So Nigeria is saying today that we're going to produce more condensates, but that's key. It means the fiscal deficit may not be as wide as it is, but then we're going to see the price of PMS begin to increase. I think that's the first thing. Secondly, today it's clear that only 65% of external reserves of countries are in dollars. It means that there's some diversification. People are using the yuan, the Japanese yen, the euro, and to a very limited extent, the British pound. So we're seeing that happen. We're seeing the price of coffee increasing, and we are beginning to see a new commodity cycle where commodities are beginning to increase based on the fact that a vaccine. But then the limitations of the vaccine, they said the Chinese vaccine has only 50% effectiveness. And the vaccine doesn't prevent you from being infected. It only prevents you from being very ill or very sick. So we don't know. It normally takes about 5-10 years to produce a vaccine. Now we are rushing it in 1 year. And then we are now beginning to see the problem. But the good news is that Johnson & Johnson vaccine is only one shot rather than two shots within 3 weeks. So I think that is, but I think we need to go back and spend 1 or 2 minutes looking at what the Dangote group.
Absolutely. Yeah, and I was going to, you were talking about these companies that will benefit, and then I want to bring you back, to that, looking at the policies, perhaps, that the federal government would likely put in place to support these businesses. You talked about Dangote. Of course, Dangote would need some forex to actually do this business, just as any other company in the manufacturing sector.
Well, first and foremost, forex restrictions are not consistent with regional trade. Because for every transaction you enter into, it has to be settled in a currency. And so if after I've bought some goods and then I'm struggling around to look for foreign exchange to settle it, then that defeats the whole essence of the African Continental Free Trade Agreement. Once you have regional blocks, it assumes free movement of goods, free movement of currencies, free movement of people. And so what do I see? I see a situation where, for example, the hub status of Nigeria, you have a refinery, you have a petrochemical plant and everything in the export-free zone. Those things, there will be need for the government and the governments to build infrastructure so that the pipelines, you can move refined products out there. So I think the Dangotes of the world will be earning more foreign exchange than spending foreign exchange. It will actually help Nigeria's foreign exchange position because Nigeria stands to benefit from the kind of economies of scale and the localization of industry. So you find that companies like Nestle, Guinness, Nigerian breweries will rather produce here and take the products across to other countries. And that is the benefit of this. And I think that the mindset, the policy-making mindset in Nigeria has to move away from protectionism to liberal and multilateral trade, and also the fact that you need to support Nigerian multinationals who are competing in other countries, Nigerian banks that are in other African countries, Nigerian manufacturers, the Dangote Group, the Globalcom, MTN, all these guys have to go across. And then, quite frankly, not in 2021, but by 2022, Nigeria begins to see the huge benefits of free trade, near convertible currencies, much more efficiently priced money markets, because right now you have interest rates at 1% and inflation rate at 15%. We need to get away from those.
But these some of these businesses are yet to even understand how the nitty-gritty of this deal, particularly when you talk about the rule of origins and all the issues as regarding, this deal.
Yes, it is true. Not only the manufacturers, but even the consumers. From here to Cotonou is 120 kilometers. There's 90 kilometers in Nigeria and 20 kilometers or so, 30 kilometers within Benin Republic. It takes you 3 hours to cover the 90 kilometers between Lagos and Seme. And it takes you less than 30 minutes to go from Seme to Cotonou. So the mindset of, that when we're in a free market and ECOWAS region, people should be able to go across, people should be able to fly across. I think the point you make is important, that how do we actually benefit and how do people feel the impact of a wider trade zone and towards regional integration. Those are the things that we need to educate people and educate ourselves about. But first of all, we have to accept that this Nigeria in 2021 will be totally different from Nigeria in 2019. We are not going back to pre-pandemic days. We are going back to post-pandemic era.
So I remember there was a conversation about a single currency for Africa. So with the AFCFTA going forward, do you see that conversation, coming back?
No. First and foremost, that was a French concussion of trying to convert the CFA to the ECO.
Right.
But for you to have a currency, you have to have almost equivalent rates of inflation, almost equivalent rates of interest, and certain levels of fiscal responsibility across countries and all of that. But we are going to be moving. The journey towards a common currency is much longer than the journey to moving goods across. So while in Europe, they had a custom union for about almost 10, 15 years before the currency came last, right? So before they adopted the euro as a currency, they had all sorts of arrangements, the Maastricht Treaty and all of that. So it will take time, but what will happen is that as countries move towards convergence, currencies move more towards convertibility. And so you will have what they call current account convertibility, where you can settle transactions. And then finally, you will have capital account. But the important thing is that the mobile payment system, so that if you have an MTN line across West Africa, you'll be able to settle transactions in the currencies you like. So I don't think it's going to take as long as it took in Europe. It's going to be much shorter because people are now beginning to settle currencies, pay for voice, pay for data, pay for all sorts of things. So it's a fast-moving world. And quite frankly, I think everybody will be better off for it.
Well, it's a new one, and I'm sure we'll continue to talk about it. And just as you said, continue to educate us.
Exactly.
Everybody.
Thank you very much, Mr. Rwan. It's always a pleasure.
Thank you for having me.
Show. All right, we'll take a moment, and we'll be back. Okay, let's look at what yesterday was like at the equities market. Eddie Dion has all the details. Eddie, good morning.
Good morning, Chimi. Well, the market sustained a positive sentiment for the third consecutive trading session. As you know, the market was up 0.11% at 40,341.05%, and that was due to interest in flour mills, Mobil, and WAPCO. We saw the equity cap jump to 21.093 trillion naira. Yes, Chimi, we have gotten to the 21 trillion naira level, and I hope that we're able to, go beyond that. However, the activity level was lower in the sense that on Tuesday we saw huge turnover of volume and value, but then yesterday we saw 468.14 million units, which is actually normal or high, valued at 6.96 billion naira, traded in 5,697 deals. Sectoral performance was broadly positive. We saw gains in all the sectors we tracked: the banking sector, the consumer goods sector, the industrial goods sector, insurance, and oil and gas sector. But then right now, I'm being joined by Kayode Olayemi, a stockbroker at CSL Securities, to get more sense of the trading day. Good morning, Kayode. Thank you for joining us on the program.
Good morning.
Well, MTN Nigeria has been the most traded stock in terms of value for 2 consecutive trading days now. What is happening on that stock?
Significant, but not unusual. I think that basically the liquidity in the system is still high, and we're still seeing local investors to pick up. So nothing unusual happening there, though the volume is significant compared to average volumes.
So with oil prices now, we've gone to the $50 per barrel level, will that have any impact on the stocks on the oil and gas sector?
Okay, yeah. Is going up would affect the exploration companies we have on the market, the likes of Seplat. But overall, to news flow regarding the vaccination, extending lockdown, would have more economic activities in 2021. And that's why we're seeing the price of crude oil rise. So far, it's been positively affecting the foreign reserves. I think yesterday the news was that the reserves about 36.1 billion, which is about the highest since mid of last year. So I think crude oil prices going up would be supportive for the foreign reserves and allow the CBN to continue to manage the FX situation positively. And typically what we see is that when that starts to happen, foreign investors get more confidence in the market, and that should improve market activity on the exchange.
Okay, just before I let you go now, could you just tell us, what are the opening calls in the market today?
At the moment, market is up, driven by the insurance sector and the oil and gas sector. The insurance sector has been up for a few sessions now. And the oil and gas sector is responding to the news yesterday about Adova acquiring NU. So I think this should be supportive for the market today for a positive close.
Right, Kayode, thank you for your input on the program. Kayode Olayemi is a stockbroker at TSL Securities. Well, Chimi, the market is up now. We just hope that continues for the rest of the trading day.
Well, going by what Kayode said, I'm very optimistic it will, and particularly since investors are eyeing something, and you know what I mean. Mm-hmm. You know, the dividend payout, yes, of course. So we'll continue to see this positive trend perhaps for a while. Okay, we'll take a quick break, and then when we come back, we do an opening call to London. Just stay with us.
And Juliana joins us now for updates from London. Yeah, let's start off with Brexit Aftermath. Deliveries of Scottish seafood to the EU from smaller companies have been halted until Monday 18th. What are we learning about this?
Yeah, good morning. Well, Scottish seafood appears to have been plunged into a crisis. This was discussed not at length, but certainly on social media yesterday during Prime Minister's questions. Boris Johnson was asked about this by Ian Blackford, who is the leader of the Scottish National Party in the House of Commons. And one of the issues they're having is a lot of bureaucracy and red tape at the borders. So typically, some Scottish seafood would leave Scotland. It would arrive at restaurants in France and Spain on the same day, but that's not the case anymore. A lot of the drivers are having issues with filling out customs declarations. Also as well, because of the new Brexit procedures, seafood is now having to be inspected and taken off the lorry by veterinarians, and this is taking at least 5 hours per lorry. So many restaurants are just refusing to take the fish. So what DFDS are doing, DFDS are a Danish company that look after group exporting of seafood. They've decided to halt the process from Scotland to try and allow more time for training for staff. Of course, this is a major issue because Scottish seafood brings about £1 billion every year to the economy. But as to be expected, and as we were warned by Michael Gove, a very senior cabinet minister in charge of the Brexit process, there will be delays and there will be some issues. And unfortunately, the Scottish food industry is seeing some of the fallout from that.
Mm. So looking at transportation, rail services in Britain will be reduced to 72% of the pre-pandemic levels over the next few weeks, and timetable cuts will be announced later today. Not much people are moving anyway, but how does this work now that for essential services like you and people that work in the hospitals?
Well, the 72% cut is much better than was expected, and it's better than the first lockdown, which I believe was about 50%. But, you know, if you look at the data, there are only 17% of rail users that were using it pre-pandemic that are using it now. So it's way above what really is necessary. And I think rail bosses, along with the British government, are doing this to try and save money and to ensure that staff who work on rails are not getting themselves exposed to COVID when they don't need to be. The rail industry obviously is going through a huge crisis at the moment. The rail industry has basically been franchised by the British government. They are covering all the costs to the tune of about £9 billion, and we are not expecting rail to be the same anymore because so many people are working from home. There's so many, tens of thousands, in fact, millions of people from out of the country that use the rail service every day. They're not using it. I believe some rail bosses have had to pay back £500 million in refunds to most commuters that were buying their tickets a year in advance, and they're not doing that now. So yes, there is going to be a reduction of services, but the most important times of the day, very early in the morning, from about 4 o'clock to about 7 o'clock, the peak service times here in the UK, the rail service will still be running smoothly. So essential workers will be able to get to their final destinations.
Okay, and Unilever's boss, one of UK's biggest companies, has said his office workers will never return to their desks 5 days a week in the latest indication that coronavirus will transform modern working life. Any idea what other working patterns he's pushing for at this time?
Not certain, no, but he was speaking to Reuters yesterday in a virtual conference, and he was talking about this new hybrid mode of working, especially a lot of the big companies, big tech companies, big lucrative firms. They just don't see a Monday to Friday 9 to 5 working life beneficial. For some people, it's a thing of the past, although there are some smaller corporate giants that hope it won't be a thing of the past because they're desperate to get their staff back into the workplace, especially in the city of London, which is completely scarce at the moment. And there are some bosses that do believe some staff are more proactive and more productive when they're sitting at their desk. And of course, there is that social side. But yes, he was saying that he has been testing this new method of letting people work from home, letting people come in 4 days a week. I believe in New Zealand, where Unilever have quite a big presence, they're already starting this new hybrid method. He's got about 7,000 staff in the UK, 150,000 staff worldwide. This is something, again, a lot of big bosses have already tried. I believe Twitter, Jack Dorsey said, staff will never, ever come back to the workplace. So it's becoming a new trend. And perhaps, in the next couple of years, most of us will have swanky studios in our back gardens. Who knows?
I guess it's the new normal. Anyway, thank you for your updates, and do enjoy the rest of your day.
Thank you.
And now for the debt and currency market, let's switch over to Eddie.
Good morning, Ladi. Well, the fixed income market was mostly bearish yesterday. The bond market was bearish as yields expanded, although marginally by 1 basis point. However, we saw yields decline at the short end of the curve, but then there was a lot of buying interest in the April 2037 bond, and that expanded. On Monday, we had on Wednesday, we had 7 deals worth 1.20 billion naira. The Nigerian Treasury bills market was also bearish yesterday. As we know, there was a primary market auction, and we'll be Chukudi Unwa Okeke, a chief dealer of fixed income at FSDH Merchant Bank, will be joining us now to tell us how that played out. Good morning, Chukudi. Thank you for joining us on the program.
Good morning. Thank you for having me.
Well, we had the first primary market auction yesterday. What was the turnout like? What are stop rates at now?
Well, yesterday, as we've seen in the previous auctions, we've had more people subscribing at the auction than the amounts offered by the DMO. For the 91 days, DMO offered about 12.76 billion. Subscription levels were well above 23 billion. However, the DMO sold 15.9 billion of that, while at the 182, they had offered 26.6 billion. Subscription was 30.6 billion. They sold 25.37 billion. Well, the interesting part was on the 1 year, where they had offered 193 billion. Subscription levels were over 230 billion. However, 65.9 billion was allotted at the auction. The DMO repaid 125 billion of the maturity back to investors. For the rates, stop rates for the 91 days was 0.5%. Up from the 0.035% at the last auction. For the 182, it was 1%, up again from the previous level of 0.5%, and 1.5% for the 1 year, up from the 1.21% that we saw at the previous auction. In the market, we saw a slight rise in yields across board. However, market sentiments still remain wary as the players are waiting out to see how long we can stay at this low end. Until that becomes clearer, we might still see low activity in the markets.
All right, Chukudi, well, we'll just wait and see what happens in the market. Thank you for your input on the program.
Yeah,
Chukudi Onwa-Okeke is the chief dealer of fixed income at FSDH Merchant Bank. Well, that's it on the market review for today. Over to you, Timi and Ladi.
Thank you, Eddie. Perhaps I'll say it's the wait and sea mode all the way.
Yeah.
Okay, that's a wrap of the program. Thank you for watching. I'm Chimeze Ubi Iwagu.
And I'm Ladi Williams. Thank you for watching.